wife that 20 million, almost 20 million of the 21 million are now mined, and 20 million is going to come down to 450 Bitcoin a day. But at the same time, you're happy to take the risk of price action.
Hey everyone, very good morning and super welcome to Hash It Out by Foundership. I am Bimlesh Gundurao, co-founder at Foundership. We are a global Web3 accelerator working with early stage startups in Web3 and AI. And we have accelerated 40 startups as part of our portfolio across 9 countries. And several of them have gone ahead and raised their follow-on funding rounds and have leveraged our coaching capital community as an enabler, ensuring that they not only succeed in their endeavor, but create an impact in bringing blockchain for the masses and for businesses, for all of us to use technology that creates trust, transparency, and verified processes. So I'm super excited to have a head of capital at Foundership, where we talk a lot of things about Bitcoin today, its journey in the depth of the bear market and where it has touched. It's reclaiming its position to a $3 trillion mark. It just touched $52,000 recently, hitting the $1 trillion mark. So let's talk about Bitcoin, Pranav. You have been a Bitcoin maxi for a while. So why don't you share a little bit about your Bitcoin maxi journey, and then we'll quickly come on to what happened in the last 6 months and how we saw the journey from 19,000 to 52,000, the Bitcoin price as of today.
Absolutely. It's uncanny that we ended up talking about this, but I had this t-shirt on. So it is literally a random talk about Bitcoin. And so guys, thanks for doing this. As always, we talk about these things offline all the time, but it's interesting to, I think, share this with our larger community. And my Bitcoin journey started 2016-17 in the ICO ETH cycle. A lot of blockchains were, I was in the US, people were talking about Bitcoin, Ethereum Classic, Bitcoin Cash, Litecoin. The idea was that can we create a global P2P payment network? And at that point, because the benchmark was Bitcoin, everybody wanted to do it faster and with higher transaction volumes and cheaper. So that was that. And then fast forward to 21-22, where I deep dove into the whole Bitcoin sphere, got myself a certified Bitcoin professional certification, then ended up buying 2 miners in the US. And essentially ever since, I realized that it doesn't make sense to think when I should buy Bitcoin, I'll just mine Bitcoin, and that way I know every day there's some getting added to my account. So that's been my journey. I think there is no better store of value than Bitcoin. It's the soundest money that's there. I was recently telling my wife that 20 million, almost 20 million of the 21 million are now mined. And the last million, and she asked me like, hey, how many more years for the last million? And I told her 110, and her eyes popped up and she's like, what? I'm like, yeah, the last million is 110 years. And she's like, the last 15 years was 20 million. I'm like, exactly why we should hold Bitcoin and never sell it. So a lot of people don't realize that the beauty of the design of Bitcoin supply will make it the most scarce supply to asset ratio in the April halving or after the April halving. So there is a supply to price ratio, that is supply to flow. It's called S2F, supply to flow ratio, that is being calculated. And 20 million is going to come down to 450 Bitcoin a day after this halving. And therefore, we are going to see an entirely different league of Bitcoin demand and Bitcoin price action, not something that has been seen or experienced even in the last 15 years.
Got it. Fantastic. So just to get to the fundamentals, right? Why do you think, why do you believe, and why is a Bitcoin considered as an asset class? One, obviously from a scarcity point of view, right? Which is, and unlike other physical assets, this is a digital asset, right? Now, talk to me a little bit about the rationale as to why does this classify as an asset?
So everybody has their own.
Versus just a piece of technology. Yeah.
Yeah. So everybody has their own thesis, but there's multiple ways to look at this elephant, right? It's a proverbial elephant that five people are looking at it. Five blind men are telling us what it is from
Right.
the way they see it, feel it. And I think everybody has their unique perspective. My unique perspective is a combination of two things. The world is moving to a digital hybrid format, right? Over the last 2 decades, the amount of time we spend on the internet, the amount of money we spend on the internet, the amount of attention we pay to our digital presence has exponentially increased. But we saw a non-internet world growing up. Both of us at least are old enough.
Yeah.
But our kids have never seen a world without the internet.
Absolutely.
We both know if we shut off the Wi-Fi in our house, everybody is in the living room.
Right.
And when you think about how important they think their digital identity or their digital presence is, you will realize that for them, being digital is not a compromise. It's their default.
Exactly. It's their way of life. Yeah.
For us, in person is default. If I tell you, let's meet, you will not think, why should we? It's not a G meet. Let's meet will always mean we are deciding a time and place.
Right.
You tell the kids, let's meet, they'll tell you, how do we do it, right? And therefore, I think that one behavioral change in this generation and later will make that physical digital swap or shift very seamless. So that's one reason. Then comes the point of store of value. So whether it's diamonds, whether it's real estate, whether it's gold, the largest sort of, I would say gold is about $13 trillion market cap today globally, but its supply is theoretically unlimited because we don't know how much gold really is and economically viable, but its production is more or less defined and you can project its production, but its production will always keep increasing as the price keeps increasing. Plus with the gold, the difference is, why was gold valued as something valuable or considered as a good store of value? Because the whole world was on a gold-backed standard. So the fiat currencies were actually a paper form of gold. Currencies
They were always backed by gold reserves
with gold reserves of those nations.
Yeah.
But after Bretton Woods in 1971, they basically shifted out of that with the US dollar. And that led to the whole collapse of the Bretton Woods system and the gold-backed system. But the world kept accumulating its gold, thinking that this is what gets me value. And that is the mental framework of why gold became valuable and why silver is also not gold, right? Otherwise, there are 100 other asset classes that could have done multi-trillion dollar. And Bitcoin has that same mental framework. A lot of us believe that with the reducing purchasing power of our fiat currency, we would need to have some form of physical or digital gold that a lot of people call Bitcoin to be in their possession. And therefore, as supply increases, the biggest formula or the best ratio I can always tell everybody is it's 8 billion people on earth and 21 million Bitcoin, right? Not even considering any Bitcoin that's lost or locked. I'm saying it's 21 million Bitcoin and 8 billion people on earth. So as soon as you can get to your 1 Bitcoin, you are golden.
Now, we are sitting on a very interesting time, right? We have seen, I first saw the opportunity, not from a Bitcoin per se, but the entire need of a trustless system where the trust on the current banking systems around the world went into an all-time low in 2008. I bore a first-hand witness because I was working for a company that was building both banking software and healthcare software, and a lot of the guys who got laid off, from Goldman Sachs, Lehman Brothers, they were our customers for the banking software. From then to now, there's been a whole set of changes in the last 15 years in this new technology and the new way to create transparency in the financial system, so that the powers are not with a few, but the powers are with many, right? And to basically democratize the ability of financial access and financial freedom. Now, in this journey, Bitcoin has definitely emerged as one of the strong theses, and with blockchain as a fundamental core of technology, we have seen alternate systems coming up such as Ethereum, Solana, and all these systems. Now, over the last few years, we have seen a lot of technology development happening on alternate systems to Bitcoin. But why do you see there has been a slow innovation on building technology on top of Bitcoin itself?
So interesting perspective, right? And a lot of people want to say that Pranav, you're a Bitcoin maxi. I am when it comes to assets I hold, but it's not when I come to how we can utilize and leverage Web3 technology. And we've often spoken about this. It's in our decks, it's in our presentations all the time. We say that Web3, even when we decide which companies to evaluate, when we're evaluating startups applying to us, we see either there's a blockchain element, or there's a smart contract, or there's a digital asset. At least one of these three criteria
Absolutely.
should meet for that startup to be considered as a Web3 startup. And while Bitcoin is the most sound network of money that has been created in the last 100 years, there is still the need to leverage this beautiful technology that is the combination of digital assets, smart contracts, and blockchain to be able to make our lives better. And I think the purpose of technology, to get a little philosophical, is that it has to make our life better, right? And blockchain will make us less trustful. It makes us trustless to a certain extent. It makes us permissionless to a certain extent. The fact that both of us can launch a blockchain product right now on a call, sitting across a few thousand miles, is unique. The world has never seen that. Web3 gives us that opportunity. With tokenizing real world assets, we'll be able to bring in so much, right? But when you come to Bitcoin, people did not build on Bitcoin because Bitcoin wasn't built for that. Bitcoin was built as a P2P peer network of money transfer or value transfer. And
Right.
therefore, even today, if you ask me, Pranav, I want to send money to somebody and I want to use crypto, I will recommend you use Bitcoin network versus any other blockchain, especially if you're going to leave the money on chain. If it's going to get off ramped, that's a different story. But if you're looking at preserving value on chain, there is no alternate in my mind that compares to Bitcoin. But at the same time, what EVM brought was an amazing the evolution of this, right? They brought compute on chain, which is Ethereum virtual machine or EVM. And that EVM is what brought the whole tsunami of apps and what we are now calling the app layer of the blockchain Web3 into the world. And as this adoption increases, think about it like we are in the 90s of the internet. People are just starting to build. Nobody has started to yet use it. As one person starts to utilize those apps, will we see the exponential J curve kick in, and we will also see innovation happen at breakneck speed. The beauty is that with investors like us, we are able to back these companies. Therefore, instead of 20 people building, say, 25 years back in the valley, we now have 100 people building solutions all over the world. And that risk capital is what I feel is the delta, which will mean that in 5 years from now, Web3 will be where internet is today.
Yeah, absolutely. Now, typically when you talk about the crypto market, the entire benchmark is set against the Bitcoin, right? Bitcoin drives the entire index. Its currency value holds the benchmark for where the market sentiment is in generally. Now we saw the depth of the bear market in the recent years, which was last year, right? It had touched 19,000, 18,000 types.
Yeah, 16 odd is the lowest.
16 odd is the lowest. So while there were a bunch of technical or market sentiment reasons due to scams and crashes and loss of trust in the entire ecosystem, where the central exchanges kind of defrauded a lot of investors and so on. But do you think that entire downfall of the index value of Bitcoin crash only due to this sentiment, or was there something else?
So it's a very interesting question, right? If you ask Pranav Agarwal, the Bitcoin holder, he will tell you it didn't matter because I bought all the way from 3 to 67 I bought all the way from 67 to 16, and I'm buying all the way from 16 to 52. So it doesn't really matter because I see my stack as one Bitcoin is one Bitcoin. The fiat value is only important the day I want to buy or the day I want to sell. So for the Bitcoiner, it doesn't matter. Now comes the guys who are trading Bitcoin like any other asset. And therefore you will see a thin, because we call it, it has a very small market cap, right? So the depth of the market is very low. There's a blockchain element, or there's a smart contract, or there's a digital asset side. We saw this in the inverse when we had the Bitcoin ETF announcement on 10 Jan this year, and how the whole market took the token value from 40 to 50 or 48, I think is what it exactly went to. And similarly, on the downside, as we went from UST Terra Luna crash to Celsius, Vault, BlockFi, and culminated with FTX, everybody who was looking at it as a trading asset obviously lost faith, right? It's logical. And they are in it for the short-term price action. So when it was falling from 40 to 16, it was logical for anybody who holding it for the short term to sell it.
Right.
Therefore, everybody was on one side of the trade and it kept selling. But at the same time, there are folks like us who will keep buying at every price. And therefore, we don't know, that price could have been 12K. It was 16K is now a matter of fact, as in looking back a year. But at that point, if somebody said, Pranav, can it go to 10K? I'm like, absolutely, it can go to 4 digits also.
Right.
So you don't know, right? But the idea is that at every price, there are people who will bring money to buy Bitcoin. And therefore, it will find a bottom. And in the last 4 cycles, it has never retraced below its previous high. It's more or less gone to the previous cycle's high. So in the last cycle, it was 3,000. In this cycle, it was 16,000. And hopefully, wherever we end up with this time's high, we don't see a lower price of Bitcoin than that. So that's where we sort of, that's why I feel the price action in the short term matters to people who take trading like positions, but it doesn't really matter to the Bitcoiners. And just for a statistical point, almost 60 to 70% of the Bitcoin has not moved in the last 2 years.
Got it.
So that is how rock solid the anchor bedrock holders of Bitcoin are.
Right. And it's always a much smaller community when it comes to Bitcoin believers versus rest of the guys who are very actively trading, right? From a fancy point of view, who like the intensity of speculation and the intensity of volatility versus the long-term holders of Bitcoin. That's interesting. Now, switching gears, right? So coincidentally, the last 12 hours, both of us, have written about Michael Saylor's, recent observation and interviews. And Michael Saylor at MicroStrategy, I think, has been one of the early believers as a corporate leader to bring in Bitcoin into the balance sheets, right? It's a very contrarian view of a company holding Bitcoin on their books versus an individual holding Bitcoin on their assets. Now, well, I think before I got to know about MicroStrategy's position on Bitcoins, all of us knew, Elon Musk at Tesla was the first one to kind of say that, hey, I'm going to accept, Tesla is going to start accepting cryptocurrencies, and I would prefer if people buy Tesla with the Dogecoins, right? But outside of a B2C segment, MicroStrategy is a hardcore B2B company, a traditional analytics company that serves, multiple Fortune 500 companies as their customers. And for a chairman to believe this and to bring it onto their books is a game-changing way of looking at it, not only as an individual asset, but also as a corporate asset, right? Because you will not find typically a corporate buying gold and having it on their assets versus they would hold land holdings, or they would hold stock holdings or something else as part of their assets.
Right.
So I would like to understand from your point of view, what led him to do this, if you have any insights from your Bitcoin network and your understanding of this space, and just generally talk about this strategy of
absolutely.
corporates getting into Bitcoin.
I think Saylor has been super vocal, right? If you were to ask me, he would be in the top 3 people who have evangelized this space in my view. And like you rightly said, his approach and his evangelism holds a different value and respect in our eyes, right? Because he's done it with a corporation that's listed. Not only is it a business, it's
Exactly.
also a business, so it's publicly owned. Now, there are two, three elements that have led to it, and he's spoken about it over the last 3 years, 4 years since he's gone into doing this actively. He obviously had a very strong Bitcoin thesis about 2021 and therefore wanted to start parking his company's money, long term treasury investments in Bitcoin. He went through the whole process of educating his company and educating his board and educating his shareholders. And at that point, he realized that, hey, wait, if I think this is this great, I'm sure there are other people who want to buy Bitcoin as well. But like you rightly said, it's counterintuitive for a corporate treasury. And I've been in those boardrooms as a CFO, as a director in a multi-million dollar corporation, where proposing to hold a volatile asset as volatile as Bitcoin or as obscure as Bitcoin is not really appreciated, and you don't want to play that game, right? But at the same time, you're happy to take the risk of price action. So he wanted to give that solution to others by becoming a Bitcoin stock. Because at that time, if you wanted to buy Bitcoin as a business, you had to go and open an institutional account with a Coinbase or Kraken or somebody, Gemini in the US. And therefore, then you have to have trust. You have to assume that that guy is not going to do something hanky panky with your Bitcoin and all of that. And then you have one more reporting to make sure of, right? It's like one more place your cash is parked. Plus, it's a very big process because now you have to define a new process on how Coinbase's account will work.
Right.
And obviously, these exchanges have improved their institutional offering greatly in the last 5 years, but that wasn't the case 2020, 2021. So at that point, he realized if I start holding Bitcoin on my balance sheet, people can just buy the MicroStrategy stock as a
Stock, right.
So there is a process already defined for buying and selling equities as investments by every company. They'll have a broker account, they'll have an exchange demat account, they'll have all of the corporate processes in place on who can give buy orders, who can give sell orders, how much can be sold, etc. What are the values of those transactions? So your corporate process SOP is already established. And that is what triggered this. Then, of course, where I think he did the most high risk move was where he went and borrowed money and bought Bitcoin with that money. And he told the world that in the first round it was warrants, in the second, third round it was debt, the latest round is also debt. Because his thesis was, why should a 0.5 interest rate debt not be used to buy something that is going to be superlatively more valuable in the next 2 decades? And he likes to never say never, but the idea is that they will never sell their Bitcoin, right? So they will always hold Bitcoin. And that has helped him also become and bring a lot of attention to MicroStrategy. If you see a corporate identity or corporate branding of MicroStrategy, it's more than a decade-year-old company.
Right.
Nobody knew about it. They actually started off, and I'm sure you know about it from your work experience with Indian IT majors, but I know that a lot of people don't even know what MicroStrategy did. They were an ITES company, corporate software, SAP implementations, ERP implementations back in the day, going on to other tech, and now they're doing AI, right? So I think that's a very different piece of his business, but his Bitcoin strategy has brought a lot of attention and positive PR to MicroStrategy as a business as well. And they've actually used that to leverage the MicroStrategy business of data analytics, most recently AI, which I think is a beautiful strategy if you think about it, right? So that is what he's done, and huge respect to Michael Saylor. I met him in Bitcoin 2022 in Miami, and I think he's amazing as a person. One of the things I love about the Bitcoin space is that a Michael Saylor or a Nick Carter or a Anthony Pompliano, the guys, or a Peter McCormick, the guys who are defining the space by evangelizing it all over the world are actually still accessible to a common guy like me. And I think that is what is amazing about this space. And we might lose it in the next decade, but till we have it, I'm going to enjoy
Right.
it. And I think that's very, very interesting, where a whole alternate access is available to really good OGs of this space.
Fantastic. Now, do you see with the success of what they have been able to do and pull off, do you see this to be a common strategy or a sought after strategy for very aggressive chairmen or CXOs in the companies around the world to go after? Do you see the trend
It's
coming
not,
in from
right?
a thought
It's not.
process?
If I were to, it's actually not, it's counterintuitive, right? So if I were to think of my boardroom role in a large corporate, I would immediately, if I'm playing devil's advocate, I love the fact that people want to buy Bitcoin on their balance sheet, right? Nothing makes me happier. But if I were to wear my corporate hat, I would be the first person on that table to say, hey, if you want to do this, we need to have a separate entity that doesn't interfere with our business, because we are not in the business of Bitcoin. So if someone would have asked me, should Tesla accept crypto as payments, I would be the first person in that boardroom to say, no way, Jose, not happening. We cannot do it. It does not look, it's not good financial fiduciary responsibility, right? It's not a good financial action. And at the same time, is this a great investment to park some of my money? 100% yes. So I think for me, that line crosses over when I take Bitcoin as a treasury asset, which
Right.
goes into my long-term investments at a business. 100% we should do it. I don't say whether you have 5% or 50%, but you should have some exposure to
Some
Bitcoin
allocation, yeah.
on your balance sheet, like we do for our individuals as well. At the same time, I would not want companies to make Bitcoin their business, where the fact that, as we've seen with the Bitcoin price and the volatility in the MicroStrategy price, you end up mimicking the price action of Bitcoin with your stock price. That is not a great investment strategy, right? You want investors to come trust you and hold your stock to build a business. So if they,
Absolutely.
and today with the Bitcoin ETF, it's a moot point, right? I can just buy the ETF. I don't even need to hold Bitcoin on my balance sheet. So with the ETF coming in the world's largest capital market on Wall Street, I think it doesn't make sense for anybody to go and do something as extreme as MicroStrategy. But 100% every business should look at holding some part of their assets in Bitcoin, either through the ETF or directly through an institutional account with an exchange.
Absolutely. Fantastic. As we wrap this conversation up, where do you see having this coming out sometime in April this year, right? On the Bitcoin side. What are your sort of market dynamics that you expect to see to all through 2024? What's your reading of the market?
So my analysis is a combination of two thought processes. The first one, easier to understand. Today, there are 900 Bitcoin created every day. This goes to 450 Bitcoin at the point of halving when 840,000 blocks are mined on the Bitcoin network. At that point, we are going to have 450, even if you consider a $50,000 price as nominal, that valuation is what is less than what Bitcoin ETF is buying today. So therefore, we are going to have just the ETF buying up and eating up more Bitcoin than we can then is generated by the Bitcoin network. And therefore, folks like us who hold Bitcoin, you and I, would have to supply that demand, or the price goes up. As the price goes up, the person who is not part of this network, either as a TradFi investor or as a ETF holder or as a Bitcoiner, suddenly realizes that, hey, I'm missing on something. FOMO is a very big action, call to action. Everybody stands up and says, I want to buy. So now 50 is 60, 60 is 70, 70 is 80. And the moment it hits a new all-time high with 68K, you'll see a lot of money pumping in
Coming
again,
in,
thinking this is going to go 1x, 2x, right? And crypto bros like to talk about 10 and 20x's, but if you're in the normal real world with big ticket $1 million plus investments, you are looking to grow 10-20% a year on the dollar, and that's a great performance. You've outperformed everything if you grew 15%. So this is a short 15% over the next 5 years, right? And as more money comes in, more demand, and therefore the price goes up. So that's one thesis on the ETF side. The other thesis is that because we've got all of this price action that's happening with the last 15 years, you will see that Bitcoin crypto market cap capped at about $3 trillion in the last cycle.
Right.
50% or 45% was the dominance of Bitcoin at 67,018 million Bitcoin. Approximately, you will see that there was about $1.3 trillion of Bitcoin in the market cap wise. If you were to assume that this cycle will be a 2x from there, then you're looking at a 3 trillion market cap, which when you divide by 20 million circulating supply is 150K Bitcoin. So that is also why my base case for this cycle is 150K. And I think it was 250K on the upside, but with the ETF buying up demand like it is, I think we may actually get from 250 to 500K this cycle. So I think that is the true upside potential over the next 2 years. And more importantly, what I want to study and see whether holds true is when we draw down, how far do we draw down this time? It may not draw down as far as 70% like it has in the last 3 cycles. So that is more interesting. I think the peak is going to be 150 plus, and a bottom is going to be less than 70% drawdown from there. So basically, you'll have to see 50K Bitcoin again. Buy as much as you like.
So this also means that there's going to be a lot more liquidity coming in, which also means with more liquidity creates more opportunity to invest in in crypto projects, and thereby it's all great upside for the entire Web3 ecosystem, for every builder that's going to be building on or is currently building on now, in enabling more access to liquidity in this entire market.
Oh, 100%. So there's a very well documented and well established practice of risk on risk of investment cycles. So with the Fed rates, with the US Fed increasing the interest rates last year, over the last 2 years, we saw that the risk off environment was in play, and companies were making 4% on the treasury bills, on the T-bills, and that it didn't make sense for anybody to move their money here and there into riskier assets, which would have to give 15% to even make any sense at all. Versus now, if the Fed follows through with its recent guidelines on reducing interest rates and rate cuts, plus elections in the US in November, we might see a downward trend on the interest rates, which would mean that the switch flips back to risk on. If it comes to risk on, I expect a lot of institutional money to come into crypto as well. And that would mean that a lot more funding is available, a lot more buying is available, a lot more support is available overall, non-monetary as well, for the Web3 ecosystem. What we really need in this cycle is that we need user adoption. So I think the biggest responsibility that all Web3 players, whether it's us as enablers, whether it's blockchains, whether it's projects, have is that we need to make sure that our tech is adopted by users, and we should do whatever it takes to get that adoption curve kicked in. And I think that is going to be the golden opportunity of this cycle, where millions of people relook or revisit or visit for the first time into the Web3 ecosystem, and they don't leave.
Yeah, absolutely. Fantastic, Pranav. There's been a great conversation. We have covered a lot of topics on Bitcoin today, and keeping the euphoria up. Let's all do everything possible to keep the spirits high for builders building it out, and for investors to hope the risk on phase comes in quickly. As we have already seen a lot more conversations around deal flow happening in this last 4 months now. Definitely been an uptick on investor conversations and chatter increasing on deal participation and co-investing opportunities. So with this, thank you so much everyone for joining in, listening in, or watching in whichever channel that you're looking at. We will be back with a new guest, with a new episode. Thanks for listening, and do follow us on Twitter, YouTube, and on LinkedIn. FoundershipHQ.com is our website, and Foundership is a global Web3 and AI emerging tech accelerator out of Singapore, India, and Dubai. And if you're an early stage startup, do look to apply to our next cohort, which starts in March, April in 2024. And talk to all of you guys soon. Thanks, Pranav. Have a great day.
Perfect, guys. Take care. Bye. Thank you.